Hi everyone, David Hames here. Welcome to my channel where I try my best to simplify investing. If you like my content, please hit that like and subscribe button. Today, I want to talk about the bid and the ask price and what does it mean. You click on your favorite stock and go to the quote details, you will see two prices, a bid price and an ask price. The bid price is simply the price that you can buy a stock for, and the ask price is simply the price you can sell a stock for. And in today's video, I'm going to talk about where those prices come from. So before we can understand where the bid and ask price comes from, we have to understand that there's a market maker, and a market maker is a wholesaler of stocks. And when you buy and sell stocks, you're actually buying and selling to the market maker. So let's take Apple, for example. Yesterday it was quoting at 184.92. If you wanted to buy Apple, you'd buy the ask price of 184.97. And if you wanted to sell Apple, you would sell the bid price of 184.93. The difference between these two prices is the market maker's profit. So the market maker is like a middleman, and when you buy and sell stocks, you're actually buying and selling with them. And what's interesting, what makes prices go up and down, if supply goes up and demand goes down, the market maker will adjust prices down. If supply goes down and demand goes up, the market maker will adjust prices up. Now, if you look at a few stocks, you may notice that the difference between your bid and ask price can be very small. Like in the Apple example, was only 4 cents. But you could click on a stock that has a really big gap between your bid and ask price. And I'm going to explain to you why. When you're looking at a stock that's heavily traded and there's a lot of volume, the difference between your bid and ask price is typically very close. And if you're trading a stock that isn't very heavily traded, you can have a big gap. And the example I want to use is, let's say you're at a house auction. This is my house. Put a little smoke chimney there. And you have the auctioneer, and he opens the bidding at, say, $100,000. And you have a terrible turnout. There's only 3 people there. So the auctioneer starts the bidding at $100,000, and this guy pipes up and says, "I'll give you $50,000." So now you have a gap between $50,000 and $100,000. And maybe this guy pipes up and says, "Well, I'll give you 60." Now it tightened up a little bit. And maybe this guy says, "Well, I'll give you 70." And it starts to tighten up between your bid and your ask. Now let's say you go to the same auction and there's our house again, and the bidding is going to start at 100,000, but instead you have lots and lots of people that showed up. Okay? There's tons of people in this front yard, and the auctioneer starts the bidding at 100,000, and maybe this guy says, "Well, I'll give you 90,000." Right off the bat, the difference between your bid and your ask is much tighter. Now this guy says 93,000, it's even tighter. This guy says 97,000, and it's even tighter. And that's kind of how a stock like Apple is. Apple's very heavily traded till the markets are very tight. Thanks for watching, everybody. My name is David Hames. If you like my content, please hit that like and subscribe button. Happy Father's Day to all the dads out there. Have a great day.